should be good to go. Yeah, for some reason I have a really high ping right now. It actually went back down, it looks like, but I'm gonna go over some of the trades I've taken recently, and then I will go over. So actually, in September alone, let me draw out the AU position that I took, which was this high to this low, break of structure, fair value gap, and liquidity sweep. So this is my first trade of the month of September. Obviously, you can see here it's a pretty quick loss, very bearish momentum. I went over this in a trade breakdown on my YouTube channel. So this is my first trade of the month. It was a -1. And then let me check chat. What's going on, Marco? You said it was like 1 a.m. there. Still joined in. But yeah, so I took a -1. Oh, it's midnight. But yeah, basically same thing. But yeah, so I took the -1 here, and then my next position that I had was pound AUD, which was this one here. Same exact rules as AU. We had the run on liquidity, we had the breakup structure of the highs, and then a fair value gap, tapped me into it, and then eventually ran TP. So I was up 4% based on those two, because I do risk 2% on my personal account. And then the third trade that I took was on Euro US dollar this month, which was a winning trade. So I had a run on liquidity here, even a run on higher time frame liquidity that occurred, and then a bearish shift in structure. The fair value gap was present here. I took from the high to the low, and then spread actually managed to tap me in here on my brokerage, because spread does help you in sell positions. So I got tapped in and extremely quickly, was already risk-free on it, and then ended up running TP. So that was another 6% gain on top of the 4%. So actually up 10% this month already on my personal, which is really good. I am thinking about possibly starting to drop my risk soon, maybe to 1.5 or 1%, just because I keep scaling into my personal, and as it grows more and more, I feel like I don't need 2% anymore. I can kind of take a more conservative approach with it. So those are my 3 trades that I've taken this month so far. So EU, GA, and AU. -1 +3 +3, or sorry, -2 +6 +6 is technically what it is. But I have a USD CAD, which is a pending position at the moment. I sometimes am not a fan of these one candle breaks of structure, similar to how I don't like this AU sell that I'm seeing some people use. But the only difference I find here is, like, I don't like these types of positions. But with USD CAD, I do like the consolidation above the high. And I do like the impulsivity of this bearish candle here, and the 75 lines up with it nice. So I do think this is a solid position overall. And from a higher time frame perspective, it just makes sense to me. And then I have a AUD chef position, which looks like it just missed. We'll see how this pans out. I will still hold it for the time being, even though I will be honest, once I see a reaction like this, it's far less likely that this trade is now gonna hold. Just because the reaction is very likely coming from within the fair value on a higher time frame, just kind of mitigating that and getting that reaction from it. If it runs the lows, it's a miss. If it comes back up, I could still get tapped into it. But overall, I have that one set, and then I don't know. I haven't gone through too many of my other pairs yet, so maybe I will go through some of these. I did see some people taking this sell, which personally, I think the main thing about this sell for me that I don't think is significant is, number one, you're working within this high and this low. And when the markets are range bound like this, I don't think utilizing a break of structure like this is very significant to overall price, because, you know, realistically speaking, if you throw a bias on this, you're essentially just seeing lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then a break of structure higher that occurred here. And then more likely than not coming to reach this target soon, with this being your protected low. But I don't like to dive too deep into internal structure like this, so I wouldn't prefer to take a trade like this. I did see some people that had that, took the loss, which is fine, it's going to happen. But yeah, I just don't like to trade essentially range bound markets, and my definition of range bound is when we're still working within a predetermined high and low, and nothing outside of that is being broken. Let's see. I did have a GJ sell. It's just been running at this point, so it's not pending anymore. Um, this one doesn't look too bad on GU, but it could go both ways. You could have a buy position here or a sell position. It is kind of awkward price for me. Um, see too much on other pairs. I did see some people with this as well. To me, it was just a little too relatively equal here. So I don't have this one pending as well as the consolidation. I don't see much out. Oh, this one actually does not look like a bad position here. I like when I see sweeps of liquidity like this and then a break of structure higher. So this one doesn't look like a bad position. So I might toss that up here on my watch list. I don't see too much else going on here. Is there any setups that you guys have that I might have just brushed over? And then otherwise, I was going to talk a little bit about the velocity of money this webinar. We don't have too many people here though, so maybe if I save it for another time, it might be better. And I do think I was going to go over some data from traders, so I can do that. So I do want to go over Marco's data because specifically one of the things right away is I know I went over it last week in a webinar, and he had my only critique. He had great data, but my only critique was I feel like he didn't have a significant amount of trades. So I do really like that now I'm looking at his more recent data, and it is something just pop up in here. I didn't even see that. That was so weird. Maybe it was hidden. But yeah, so this was his previous data, which still is fantastic. Don't get me wrong. I mentioned it last webinar. 40% win rate, 15 RR for the year, 10 wins, 15 losses, and 13 break even. My only critique here was that he didn't have too many trades, which isn't necessarily an issue if you're profitable, but I do think there's more profit to be made if you increase the number of trades you're taking. It could be due to a little bit too strict of rules. So I will go over his wins and losses, but I do want to break down, obviously the fact that now he has a total of 128 trades here. Can I toss up a calculator and see? Oops. Let's see here. So he has 34 wins, assuming 3 R minus 57 losses. So about 45 RR total here, not including break even, which is fantastic. That's definitely a little closer to returns that I typically find within a year's period using this strategy. And then I did ask him what were some things that he felt he did to increase the number of trades. And he did tell me, he did tell me not looking at retracements too seriously. That's one I also kind of ended up weeding out once I very quickly started using this plan, is not sitting there and being afraid of how the market is retracing to my entry. Because personally, in this exact movement here, this is where the psychology comes into play of, you're going to start getting in your head, like, is this really a good trade? Was it a good setup to take? I don't really like this high, maybe it didn't sweep enough liquidity. All those psychological factors, 9 times out of 10, happen during this leg up. And utilizing that in a very discretionary way is going to hurt your trading more than help, in my opinion, and it's going to have you back out of a ton of trades. And in more cases than not, I find that the trades I back out of, I'm losing. Or sorry, it's a missed winner. So I stopped doing that pretty early on with this plan because I didn't like the discretionary nature of it. It's very, very discretionary to be like, oh, this is running very heavily towards my entry. I need to delete, because I found it would just have me missing far more winners than taking the proper positions. For example, this one here, it's like, what can you define as aggressive as a retracement? And, it kind of is kind of some blurred lines there. And obviously, if I were to get scared out of this trade, or as prices returning, if I'm sitting there going, oh, well, I didn't like this break of structure, it's not that clean, maybe, or, maybe we are bearish, and all these things come into my mind, it's all psychological based, I would have just ended up missing the pre-risk to reward winner. And so he also said, looking at major swing structure rather than too internal. I do think that goes back. I couldn't tell you what pair I was just looking at, but the general idea that I first mentioned. I guess this is a good example of it, where focusing on structure when it's very, very choppy like this. I mean, to be fair, this one's not too bad because you can see your ranges forming here. It's this one here. So when you have a major swing high and a swing low, focusing on structure like this is definitely going to hurt your win rate overall. Like if I'm sitting here looking for trades like this inside of pre-established range highs and range lows, and especially when we're working with setups like this, I definitely think taking trades like this is going to lower your win rate overall because you're not focusing on that overall range that you're working within. So I do think that's another great thing. And then he said in continuations without liquidity sweeps were fine. So I'm assuming what he means by that is a little bit more of my style is I prefer some form of liquidity sweep on every trade. And I'm sure he's saying that as long as it was a continuation play and he didn't need a liquidity sweep present, which allowed for more trades to be taken because you're lessening the amount of rules needed for entry. So that's pretty good as well. And then he said, oh, he just further clarified with retracements. I used to cancel if they look too choppy. And he said now as long as it's valid within the range, or now as long as it is within the range, then it's valid to him. So those are all pretty good. Oh, he said I changed it. It was hidden before. Okay, so I wasn't tripping. So all of those are pretty good from what I see here. I like the explanation. I asked him specifically to give the explanation of what, because I want some of you guys who may be out there in the same boat kind of take some of those ideas and run with them. I've never been the type to just trade continuations without a liquidity sweep, but I do tend to take a little bit less trades than the people who do. But overall, my data seems to pan out pretty similar to what he saw there. So, let me go through some of his winning trades and losing trades now. So this is kind of what he likely means is personally, I wouldn't be in this because I don't see a liquidity sweep here, but he said as long as it is a continuation trade, it's fine with him. One thing I will say about this specific idea, I have never used it because the idea of a continuation is now introducing more discretionary aspects to your plan. And for some people, it might not be something that they want in their plan. Because what classifies a continuation when you're looking at price like this, for example, is we're seeing higher highs, higher lows, then a lower low and a lower high. So maybe for some people, we're now bearish overall. For others, this may not have even been a break because it just wicked below, so we should still be bullish. Continuations can kind of create a lot of discretion within the plan, which is fine if you're okay with understanding that and understanding that your edge can be a little bit more volatile, despite it not being as mechanical. I love this setup here. Great sweep on liquidity, break of structure, great fair value gap. Everything looks perfect in this one. I have so many setups like this as well where I see price coming downward. We consolidate for a bit, we wick that liquidity, and then break up. That's a fantastic example of a setup, and also another good idea of a reversal. Some people are afraid to take these counter trend quote unquote trades, and I really do like this setup. I honestly find them working in more cases than not, despite it being looking counter trend at the moment. And we have this setup, pretty solid as well. Break of structure. We have a run on liquidity, bit of slow volume, but it does eventually reach TP here. This setup, once again, a great example. I love the impulsivity of this liquidity sweep here. So you guys know I love when price ranges like this and we just have one nice clean run on liquidity and then a break of structure to the upside. This is one of the clearest intentional institutional involvement I've seen in the market. I mean, when there is a significant sweep right below a strong liquidity low of a range and then a very impulsive move to the upside, it's a fantastic example of price that needs to be mitigated, and then a great run to take profit very, very quickly and aggressively. This one here, definitely a little bit more odd. I would not have taken this. It's a bit aggressive for me, but it looks like it was a singular candle TP. So very, very aggressive here, but it did end up holding. It worked out. This one here, fair value gap, minor run on liquidity, break of structure to the upside. I think Someone could even look at this as this is your low, your break of structure here, and then take the entry. It might have been a miss in that case, so a little bit more of an aggressive entry did give you the TP instead of a miss here. Another good example, a nice just shallow wick right above the high, followed by very, very aggressive price action. I actually took this one live last year in December, I remember. I took this one live, and then there was another trade set up that I remember this one specifically because other traders in that I was teaching at the time that took the same position, they were already writing themselves off as a loss. They were getting psychologically scared out of the position because it looked like it was about to hit TP. And I told them to shut up and hold it. It ended up going great. So that's another one of those things, these close stop losses like this. People let themselves get scared out of the trade or assume it's a loss before it even plays out. Then it ended up running and reversing. Trade isn't over till it's over. And we have sorry, this one here. This one, another one. It's definitely a bit more range bound, but I do like I love when there's just a faint wick above a significant high. It's a great example of a liquidity sweep. Almost a similar scenario here where prices are just about at your stop loss, and then we get that very aggressive price action, and then unfortunately no break even, so you would have to kind of withstand this long period of consolidation for a little while. Oh, okay. I was confused a little bit because I couldn't see this wick here and was wondering if your stop loss was slightly off here. But overall, this looks like a good position as well. Great, exact same example. I love these wicks right above a significant higher low. These are probably some of my better or best trades is when I see just a nice shallow wick grabbing a strong high and then that very aggressive price action right after. We come right into it, we tap in. I don't know if this was your TP or if you dragged it out here. This is very close regardless. But either way, you would have to withstand the retracement probably before it hits your overall take profit there. Another great setup. So this is probably one, like I mentioned, where it's a continuation without a sweep on liquidity. Still a great setup. Very, very aggressive TP here, which is always great. We have a fair value gap, break of structure. Same exact example. I love these examples as well, where we have a sweep on liquidity, a very aggressive break of structure, and working within a fair value gap here. This here would be considered inducement as well, which I also find does strengthen positions on occasion, and then taps in and very aggressively right to TP. Make sure I'm not missing any questions. What do you think about GBP AUD? Yes, that one too actually is one I forgot to mention I have, because I was showing this setup here, but from this low to this high, and then a break of structure here. I think it's a great setup. It's definitely a bit larger of a range. I'm going to clear my previous markups. Oops. I definitely do think it's a bit more aggressive of a range, or sorry, a bit more large of a range, so this could take a while to play out if it does end up tapping in, but I do still think it's a good setup here. I like when price consolidates like this, we push that liquidity out and then make a break of structure to the highs. We have some relative equals resting up here, so this is another setup I will be watching. Sorry, I'm like losing my voice here. So let me go back to, where was I? Okay, so this setup here, another great example. The liquidity is definitely marked a bit odd here. I'm not sure what happened there, but I love the consolidation, all of these relative equals. Price just wicks through those again and then breaks down aggressively with the fair value gap. So another great trade, definitely a bit of low volume here. That retracement is very choppy and ugly, but this goes back to what I talked about when he told me he started ignoring, or not ignoring, but started not paying too much attention to how price was retracing, and that actually increased his data. I'm sure this is a great example of that, when you can see price very ugly and took a long time to retrace, but he did end up holding it through and obviously ended up netting profit from it. So that is one of those things he talked about where he said he stopped focusing too much on that, and it did have an increase on his data overall. Same position relatively. We already went over this one with the internal liquidity, very aggressive TP, so I like that one a lot. This one is definitely a bit aggressive for me personally. But I do still see all the rules met here. We have a run on liquidity, a very aggressive break of structure. We have a fair value gap present, and then price retraces up and in, and then a TP. So definitely a bit aggressive, but I do see the rules met there. This one as well, I will say this one is odd in the sense of, number one, the liquidity I do think is incorrectly marked here. Another thing to keep in mind is when price is kind of ranging once again between distinguished highs and lows in the market. This trade may have worked out in this scenario. I do feel if a majority of these trades were taken over a long-term period, it may not be consistently profitable just based on a set of rules that's met here. But I do think overall, obviously, it worked good in your favor in this scenario. But I do think with relative equal highs resting here, fairly choppy price and unclear structure, it may be less likely that these trades play out in the future, but obviously worked out in your case there, so no worries. This one, a pretty great setup in my opinion. Run on liquidity, aggressive break of structure, large fair value gap to get filled here. Price worked its way back up and in for entry and TP. And then the very last one he has here, once again, a very clean one. I love setups like this where we have, a relative range. Like I said, we push out that liquidity, we break structure aggressively. So even for me, realistically, this sweep on liquidity that I have circled there, a break of structure, that honestly would probably even be a setup for me with an initial TP. And then he took the following setup right after that, where we have another sweep of liquidity, another break of structure, tapped in, and then 3 risk or rewards. So overall, the winners look great to me. One of the main things I focus on, like I say all the time, is I make sure that your winners are consistent from a rules-based standpoint and realistic, because that is something that I found very common on live trading, is that a lot of people are missing their winning trades. And if they are missing winning trades but doing fantastic in backtesting, the majority of the time I find that these winning trades are a bit unrealistic based on their backtesting, where if I had to pull up an example here, it would be something like this, where on a live chart, some people might not have the balls to execute or trigger this, and it can kind of skew your backtesting data in one direction versus another, compared to trades like this, where very clearly all the rules are met. Strong sweep, strong break, significant fair value. When all the rules are met very clearly, this one as well is a great example. It's much more likely that when you get on your live account, you're going to be confident in that setup, compared to a setup where the rules aren't necessarily present as clearly. It might make you sit out of this on a live chart, and that will end up leading to a missed winner in that scenario. And then we'll go over some of the losing trades here, see if there's anything that I notice. This one here, to be honest, I think utilizing this as your break of structure is just not. I think the reason this high so far to the left is being utilized as your break of structure here is because of how unclear and consolidating the market was in this period, which in my opinion tells me to stay out. I also think the liquidity is marked fairly odd here. I don't really see a sweep on liquidity, so just throwing it down at the bottom of the consolidation range is more likely than not why the markets came to eventually target that low, because there was no significant sweep in that case. This one here I don't think is bad either. Like you said, if you are ignoring how price kind of forms relative to your entry, then I think it's a good trade. You have a sweep on liquidity. Very impulsive bullish candle here as well, followed by the very aggressive bearish price with the fair value. I personally would probably just delete this position just straight out of having to wait so long for the pending to be hit. If you hold it on, no worries here on the -1. This is a great setup in my opinion as well. The sweep on liquidity, I will say, does leave relative equal highs here. So typically when you see market prices trending in one direction and there's triple equal highs, that is probably something that could lessen the probability of this position. But if all your rules are met from the sense of a liquidity sweep here, a break of structure, and fair value, I think it's perfectly fine. This one, another great one in my opinion. I talked about it before. I love when I see these just very few wick sweeps on liquidity. It even came to take this significant high as well, and then broke very aggressively down. So I do like this setup a lot. Relative equal high inducement before your entry, and it was just an unlucky -1 here in this case. You take a drink of water so my voice can come back. That is, oh, gotcha. Resting liquidity. The dollar sign without an arrow is meant to be resting. Yeah, I think that's a good thing to keep track of as well. Then, if you're marking it as resting liquidity, it kind of goes hand in hand with what I was saying about the equal lows and how I would probably want to avoid having consolidation at my range lows. Man, my voice, I'm like losing it. All right, we'll go back here and look at some more of these. So, where did I leave off? This one I think is another great setup. We have a run on liquidity. We have a break of structure with the fair value gap. Price continues trending a little further. And then obviously we end up making a bullish move to the upside and taking this high. So not bad there. The one thing that throws me off a little bit here is this retracement that came up into the range and then broke lower again. In some cases, I would delete price action or delete the pending in that case. Here, I think this is a great setup as well. I love when you guys hear me talk about it all the time, but consolidation ranges in a nice, very impulsive, just grab on liquidity in very quick movement to the upside. And then overall taking that major structural high there. So I think this is a great setup. This one as well, same idea. We have triple equal highs here. We come and grab that liquidity, break lower, price works its way up into it, and then we eventually take the loss here. But once again, another setup that I don't see anything wrong with. So overall, from what I'm noticing right now, your losses look very, very good. This one here is another picture perfect one as well. So to collect this data, honestly, is significant. I see nothing wrong with it. The win rate is fantastic. And I do really like that you were able to increase the number of trades like I talked about from your previous data collection here, because going from about, what is this, 25 plus 13, so 38, 38 trades within a year with a 40% win rate, you were able to kind of not loosen up your rules, but work on them more to now roughly maintain that 40% win rate, but actually increase your trades by over 100 positions, which is very good. You took my advice very well there from last time I went over your data, so that is significant. And you can obviously see that replicated in the risk to reward that you made. So compared to this year, which is only about 15 risk to reward, you were able to increase your positions, maintain your win rate, and end up netting, I believe we did the math earlier in the webinar, but 45 risk to reward, I think, or something around there. So tripling your risk to reward by increasing the number of trades and maintaining your win rate, which is just fantastic, because that was my only stipulation on your previous data. Is it was great data, but I do think more trades would allow you to capitalize more. Let's see here. Another great position. I have lately been avoiding these one candle breaks of structure. I talked about it with the AU position here as well, where I don't like these types of setups where I have a range. It honestly more just looks like some very low and slow pullback and then one very aggressive break of structure. I typically don't take trades like this as much, mostly because this is likely caused by some form of a news event or something. But overall, I don't think it's a bad position. This one here is definitely a bit choppy when it comes to market structure. I think it's okay to take because I do see the sweep of liquidity here, the break, the fair value. But I do think when price is kind of consolidating in a range like this and then we break out of it, it's a little riskier to take because, at least me thinking from a liquidity perspective, we just have consolidation. And when the lows of a consolidation are taken, more likely than not, we're going to go and target the liquidity highs because that is where liquidity now rests. Just want to make sure I'm not missing any questions here. Sorry, my voice is like losing it this webinar for some reason. This one I mentioned is honestly a picture perfect setup. I love these ones where we have a, some liquidity formed here. We have relative triple equals, great break of structure, very aggressive. And I love the aggressiveness of the liquidity sweep as well. And then obviously price just tended to consolidate, come back, and that's a perfectly fine -1. I would say the same with this one. We have a consolidation period. We push out liquidity with this very strong bearish candle, followed by the very strong bullish candle. So a great loss in that case as well. This one's definitely a little bit more aggressive for me. I know you mentioned taking positions without a sweep of liquidity for continuation plays. So that's fine if this is something that you've seen a success with in your data. But especially when looking at past price action here, we're just seeing almost nothing going on. Um, price is just working its way very, very slowly downward, downward, downward. You may have tried to hop in with that trend and then obviously get bit for it, but overall, it's not a bad setup if that's something that you're okay with taking, is those very aggressive continuation plays without the sweep. And obviously, it seems like it's worked well in your data, so I would not think too hard about that one. Almost the same kind of idea here. Not much of a liquidity sweep going on. It's definitely a bit more aggressive of a range, and we did consolidate a long time before it, but overall, perfectly fine with a -1. This one here definitely it's a bit odd for me only because the lack of impulsivity here. I do like how you have the mark of the lower lows, lower highs all the way down. So I think this is a fine trade to take as well. I don't see anything wrong that stands out with these losses, which is honestly significant. This one here may be lacking a bit of a stronger break of structure. Especially because, when I look at your, I think this is an indicator. Yeah, fractals. So you're looking at a higher high, higher low, higher high. And the expectation would obviously be a higher low with this failing to break the high. So more likely than not, this is just a period of inducement. We grab that internal liquidity to run the liquidity highs. So maybe a bit of a stronger break of structure here. But I think one of the main things overall is that I have seen very few losses in here that I personally wouldn't take, maybe 2 to 3. So your data looks fantastic. Clearly, it net a great win rate, great amount of wins. 34 wins, 57 losses is fantastic. If you want to talk about your realized win rate, I don't know if this is included in your win rate. Let me see if I can do the math in my head real quick, because 34 out of 57 would be like a, or, oh, sorry, 57. So what is that? 34 out of 91. I think that's about 37%. So yeah, maybe you didn't include break even in your win rate. So this would be called your realized win rate, which is not including anything that you didn't net profit on. But yeah, overall the data looks fantastic here. Let's see. I was gonna talk a little bit about. Let me make sure. What do you think about NZD USD? Very similar to AU, in my opinion, but I do think that's a solid setup. Something from this high to this low, break a structure, fair value gap. It kind of goes back to what I said about I don't necessarily like these like singular candle breaks of structure when my whole range is just cleared by one candle. But overall, I don't think it's a bad setup here if you wanted to take a short position from here to here. They brought back the highlighter tool. The highlighter tool for a while, you couldn't use it with the control key anymore. It's odd that they brought it back so quickly, but I'm glad. I'll keep an eye on that one as well. Let me mark this one up without my tool there just so I can be a little more clear on it, because I do like this setup as well. Butchering my markups today. So from this range high to this range low, if it extends up a little bit more, I'll be willing to expand my fib here, but I would be interested in this position as well. So I do have a pretty good amount actually coming up for the following. It's really odd. Huh. That was odd. It was like linking my entry way higher up for some reason. But yeah, I definitely am interested in a lot of positions here. I will remove the ones that I already went over because they're no longer significant. AU, for example. So these are basically the ones that I have pending at the moment. So I have USD CAD. I have AUD Chef still. I have Pound AUD with this bit of a larger range from this low to this high. And then I do have EuroCAD. I would probably want to see a little bit more of a significant break on this one, so it's a bit early for me. But if price started climbing up a little bit more, I'd be a lot more confident in taking that position. And then NZD USD, personally, I'm not going to take it, but I do think it is a solid setup that meets the rules. Like I said, my only concern is when we have just one candle that clears a whole range for me. I've found terrible results with those trades, so but I do think if it follows the rules, I could get bit, it could end up hitting take profit, and I ended up sitting out on it. But, you know, it's a risk I'm willing to take. I use Notion to track the trades that way. BE is not my win rate. And any final comments on the trading point? Anything I need to work on? Honestly, I think the biggest thing I would mention for you right now is get used to the demo trading. Understand, like, this data that you showed me is fantastic. So you definitely want to, number one, kind of map this data on a live chart. When you get to live trading, utilize this section, mostly your win section, in my opinion. If you take a loss, it's okay to go through your loss section. But your goal with a live account or a demo account should be every time you take a trade, if you want, briefly try to scan through these trades. You're going to very quickly learn which ones look like other ones. And if you're on the fence about taking a trade, if you're nervous about a position or not confident in it, but you go and pull up an image and it looks just like it in a live market, that should be your goal. You should always keep back, utilize this as leverage for confidence when you're in a demo or live market situation. What I find a lot of people doing is they backtest for practice, they hop on a live chart, and then all that backtesting practice goes out the window mentally. They don't sit there and lean on it and leverage it and understand, okay, I am profitable over a year's period, great win rate, lots of positions. I need to leverage that in the live market and trade as close to this as possible, and it should have an edge long term. What people end up doing is they get to the live markets, all this practice goes out the window, and mentally they're scared again to take positions. Leverage these channels specifically. Look at your trades, map them out if they're similar to similar to positions that you're seeing in a live chart. For example, this one here, I would relate pretty similar to my GBP AUD trade that I took recently, where we have price kind of coming down in a bearish trend, consolidating for a little while, pushing that consolidation out, breaking structure of the highs, and then it's somewhat of what people would consider a reversal trade. A lot of people tell me they're nervous to take reversal trades. If I see that in my backtesting data, and I'm sure you have plenty more reversal examples in here, it might make me a lot more confident to go and take this reversal trade like I talked about on GA, where same exact thing. We may have seen price starting to break down. We saw a consolidation with liquidity pushed out, and then a break of structure up. Some people may be nervous to go and take a shift in trend and assume it to go back bearish again or bullish again. But, you know, I was confident enough to take this setup because I've seen it plenty in testing. Took the entry, made a great 3RR from it. Missing winning trades is really what is going to hurt more in a live market than taking losing trades. So I just want you to make sure as much as you can leverage this channel. Make sure all of your trades are looking to similar positions of this. And I think another key thing is psychologically on a live market, you may be tempted to take less trades or more trades. I find in a lot more cases, students will take less due to fear, due to hesitation, underconfidence, because they're still getting used to that live market. You averaged about 128 trades in this year here. Could be a fast year, could be a slow year. Break that down and tell yourself, okay, roughly 12 trades per month. If you find yourself taking 2 trades per month now, you may, number one, be letting psychology affect your positions, but try to catch it quicker and sooner than later. I will have people send me data like this with 128 trades in a year, but then they go and send me their live data and ask why they're not doing great, and they have maybe 2 trades in a month, 2 trades in the last 2 months, and they're wondering why they're -2 on the account. They're simply just not taking enough positions or following that same edge that they were in backtesting. So I really think some demo exposure for you would be great. Utilizing these 3 channels specifically. I mean, you did great in version 1, but I think you improved upon that significantly in version 2 here. So utilizing these 3 channels and leveraging that for confidence in your live trading. Either scenario for you, whether a demo account, if you want to take an evaluation and are okay with the risk, that's recommended as well. Or if you want even a small live account with a brokerage, I think all of those are great examples for you, or great things that you can take on. Sorry, my voice is like dying here. What time is it? Okay. So it's 10:45, so I will not have time to go over the velocity of money like I was talking about. I do think I want to do that with a little bit more people here as well. We got a bit of a slower webinar today. Why is Sven's muted and deafened? He's just here to watch me, I guess. But the other person who I had asked me to go over their data was Luke a little bit, and then I forget which one specifically he asked me for. I think he said round 7 actually. So I like that he does this as well, puts the things he's focusing on. I think this is something some people can maybe implement very, very briefly and kind of track your data, see which ones work best versus worse. But strong breaks of structure, avoid slow ranges, an early imbalance, which I'm assuming what he means is an imbalance that is very close to his entry at that 75% of the fib, swing structure, and avoid big liquidity pools. I'm assuming he means where his stop loss is resting. Taken trades, missed trades, and avoided trades. Let's look at some taken trades here. I already see massive improvement from his last set of testing I've looked at. So this is great. We have very significant sweep on liquidity. You guys have heard me talk plenty of times about how I love these very impulsive bearish moves before the bullish moves. Just because that very impulsive bearish move shows such clear institutional involvement, it's very, very likely we see price come to mitigate that position. You guys want like a more in-depth example of this as well? I did have my most recent video talking about silver. Where is my... There we go. My most recent video on YouTube, I talked a lot about silver and this exact kind of scenario where I explain this mitigation, why these very strong bearish moves before the bullish moves occur, why price has to be attracted back to it to close out these positions. I can briefly go over it, I guess, but I do think mitigations are something very important to understand because I do see a lot of people who focus a lot on this and not as much on this, the very impulsive sweep, which to me is mandated in my plan. But the general idea is at this price here, at the top of this range, institutions had to sell off positions very, very heavily to come and grab resting liquidity. So let's call that $19. If an institution sells price at $19 very aggressively and then buys even more aggressively, of course they're making more capital on this up move because they're driving price in their intended direction. They're buying, and profitable on all these positions because we're above it. However, before they continue to drive price higher like they did here, they may have to come back roughly to that 19 level or below it to close out that $19 position they opened. Obviously, it's not $19 positions for them. They're buying multi-millions of shares. But if I sell price at 19 and now price is at 25, I'm negative on that $19 sell position. So I need to come back below that area. For example, roughly, it looks like they closed out at like the $18 level. They brought their position into a slight bit of profit because they sold here. Now they're in profit because price is a little bit lower. They now are able to close out those positions and then drive price continually bullish in the intended direction, meet their targets, etc. That's kind of a very brief and quick explanation of what a mitigation is in the markets. But I do think it is very, very important when you're seeing these strong bearish moves. It's so clear that institutional involvement has occurred here, very bullish movement, and they're going to have to come back to mitigate those initial sell positions that they created to then drive price in their intended direction. This one here, great setup. I love the inducement here. A bit of a slower high, not as much of a sweep, but I do love the range. For people that take continuation trades, I think this is a great example. Once again, fantastic example of that very impulsive run on liquidity, followed by a very aggressive bearish break. Shows extremely clear institutional involvement within this heavy bullish move. So we can assume that price is going to have to come back up there and mitigate and then run lower. I also love this setup for the idea that I've heard so many people get scared out of trades because of 3 very bullish candles like this. They might go and cancel their trade and get nervous that they're on the wrong side of the market. I love that we can see an example here where very bullish price just turns directly around and profits in our favor. This one's a good one as well. My one stipulation with it is I don't like to take trades where my 50% of the range has exceeded the break of structure in some cases. It's just kind of my soft rule for deleting orders when I consider prices move too far away. You can see though, obviously in this case, there still was some fair value to be filled here. And once we did, we got enough of a reaction here to break even. So perfectly fine. This one as well, I think is a great trade. Great sweep on liquidity from what I can see here. Very bullish break of structure that occurred here. And then price worked its way back down and in. Just a pretty solid loss overall. This one here, I definitely think is a pretty good example. My only stipulation is I try to avoid trades where it's relative equal lows. it may seem like a liquidity sweep, but it's so faint here that it's almost indistinguishable from equal lows. I do find those positions lose a little bit more than they win. And then also, I've talked about it earlier in the webinar where when you have consolidation periods, very clear consolidations like this, so much liquidity rests at these highs. I mean, there's got to be 5 equal highs here. So when price goes and takes the high in all of that liquidity, there's so much more orders in the market for sell positions now that more likely the market is going to push bearish and sell off very heavily through the range lows at the bottom. Other setups look pretty good to me. I don't see anything that stands out. I love this setup as well. Great sweep on liquidity, break of structure that occurred here. I typically like to mark my breaks based on the area that's swept. So if this is the area in the range high that you're using because it swept the liquidity here, my break of structure would be labeled here. It's not a big difference, but it's just something that helps me keep track of my trades a little bit better. Almost the same idea here. If this was the move that swept liquidity in your case and took this high, I would consider this or even this as your break of structure. But overall, great position, came right back up into it, tapped in and won. I wonder if there is a data breakdown here. So maybe not. I'm running out of time a little bit for this webinar, but I wanted to see if there was any breakdown on data with like an FX replay statistics. Doesn't look like it. So I definitely think I would want a little more info, just because, you know, it's one thing to see a bunch of taken trades on an image here, but to kind of map out the data and see how the equity curve pans out, I think is very important as well to draw any conclusions. But overall, I think all of these setups are definitely an improvement from the last set of testing I've seen from him. I'm gonna mute my mic real quick and take a drink of water because you guys can probably hear my voice giving out at this point, but I'll be right back. All right, sorry, I'm like dying for some reason. I don't know why, but so overall, I see huge improvement here. I actually think I took this trade live. Yeah, I did take this trade live as well, because I remember how long this long take profit took on UJ. But once again, a great example of that very bearish move before the strong bullish move. Such clear institutional involvement, and price worked its way back in, got tapped in very aggressively, and then took ages for this to hit TP, I remember. But what was this, November of 2023? And I do remember this trade specifically. Actually, a lot of people in the server that are some of my older students, you'll probably remember taking this trade as well. I feel like everybody spotted this one very nicely. But okay, so he has missed positions here. I won't dive too much into missed positions, except this one would probably have actually tapped it on a live chart. But the reason I don't go over missed positions too much is it's very common on the 4-hour for this to occur, so definitely don't feel bad about missing a lot of positions. 4-hour runs with typically pretty high volume. I love the positions here though that he's taking. Like this one is a great example. A great sweep, very impulsive break, lots of fair value to get filled in. Price works its way down, does miss entry, but you can see he's on the right side of the market with how aggressive that bullishness was after. Make sure I'm not missing any questions. So I won't go too much into missed trades. They all look fantastic as well. I don't know if this is the same one it was, yeah. Yeah, this is definitely huge improvement from what I've seen in him, which is fantastic, from previous sessions that he's done. Avoided trades. I like this section, but I would... Okay, here we go. I was going to say I would like some details on why he avoided them, as well as I think it would be better off if he maybe took data on the statistics behind them as well, because it's one thing to avoid a trade because it didn't have a strong break, but if you look at the statistics and find that most of the trades that you avoided because of strong breaks were winners, it's something that gives you very significant, very important data to then go and improve your plan. And you might be able to say, okay, the no strong breaks only gave me more losers. So that's another great piece of data that tells you maybe I should be avoiding these. Or on the contrary, you might find that a lot of these types of trades give you more winning positions, uh, and it's significant to kind of have that data in your repertoire. I will say, keep in mind, winning positions are 3 times as important as losing positions. So, for an example, if you find that these weak breaks of structure trades that you avoided net you, let's call it, they saved you 3 losses, but you got 1 winning trade from it, it is still more important to take that 1 winning trade over avoiding the 3 losses, because winning trades are so much more important than losses. Internal structure still valid, question mark. Yeah, I would say it's definitely tough. This would go in my category of consolidation in the markets when I have these relative range highs and lows. I do think, though, the fact that it took this overall range high with a run on liquidity and then broke lower, I think it would be fine to go and take a bearish setup off of this. But yeah, it's definitely just some tough structure that occurred here. Internal but valid. So a lot of your internal setups that you have marked out here are mostly due to consolidation. So I do think that avoiding them may be better off in your case. If you're seeing things and you're thinking they're internal, it's most likely because you're seeing these very sideways markets, and in more cases than not, you're going to take losses in a sideways market. Internal but valid, question mark. I think this one would be a valid position. I don't see, for the people that just take continuation trades with the sweep on liquidity, the thing that makes this valid comparative to the ones I talked about before is that yes, we are within a range, but you can see this leg down here did end up taking the overall, breaking overall down in the range. So, and it does have some great inducement there as well. Internal but valid. Same kind of idea. I don't see anything necessarily wrong with this trade either. This one here as well, I think is fine. I just think you maybe have marked your breaks of structure. I see you're trying to mark the swing point, so it's not bad, but I do think if you follow, lower low, or sorry, higher high, higher low, higher high, that expectation of a higher low is perfectly fine. There is a bit of insignificant fair value here as well, though. So I think some of these avoided trades are not bad. Okay, so late FVG and because of liquidity. Internal but valid. This one I do think is avoidable. I don't see much going on there. Doesn't show very impulsive movement. I think the biggest takeaway from this, number one, you've definitely improved massively, which is fantastic. I can see huge improvement from round 7 compared to, I forget which one I went over my last webinar. But huge improvement here already. Not only I can't see your data, but just from looking at the trade positions alone, I can tell you're definitely profitable now, based on this data I'm looking at, compared to, I know the last webinar we looked at your data and it was about break even, so it wasn't very profitable with an edge. I can definitely see that this round, these things you implemented here are definitely improving your data. When it comes to avoided trades, I think the only improvement I would say here is maybe track a little bit closer what actually happened with the positions, maybe, so that way you're learning from the data, as opposed to if you avoid trades for bad reasoning, it doesn't show here, compared to if you keep track of the data, all the trades that you said internal but valid, question mark, having how all of those panned out would answer that question for you, because you would be able to see, okay, all of the trades I thought were internal, I had 3 winners and 5 losers, which is profitable. So it may tell you, okay, if I do think something is internal, it's better for my edge to take it. So you will learn a little bit more from that. But overall, fantastic improvement here. Like, this is massive improvement. So I'm really happy with this. You're clearly putting in the work testing too. So great job on that, Luke. And I think I'm just about ready to wrap up the webinar here. Yesterday I red flagged USD Chef. I forgot to put the pending order. You look if it was a valid trade. Dodzy said he's in it. USD Chef. Honestly, that's a honestly, is it this pending here? I was looking at this earlier in the webinar. For me personally, I didn't see a great sweep on liquidity here, but I know a few people who took this trade. I think it's perfectly fine to take. For those of you that take those continuation trades, Forgetting to set the pending kind of sucks. I will be honest, I try to set them as soon as I kind of spot the setup. It just makes it easier. Sometimes I'll forget, but it makes it a little easier on me in that case. I did see someone who had this sweep, this break, and this fib as well. I do honestly think that's valid too if you want to take it that way. But this smaller range here, I think, is what I've seen mostly because of the fair value gap near entry I've seen people using, and stuff like that. So I think it's a perfectly good setup. It looks like it's about a hit risk free for Tyler. So I use Notion. I can track every single metric and filter it down. Yeah, that's really good too. I'm assuming what you mean by that is I actually have a Notion journal, a very old one I used to use before switching back to Excel. But I used to just have a huge grid, and I would be able to write all these minor details. Like for example, what Luke had written here. Go to this one. So I used to be able to write strong break, yes or no. Uh, early imbalance, yes or no, and then I could filter all of my trades by those different I don't know what to call them, but those different variables or different confluences and see which ones tend to work out best for my data. So that's how you can really dial in on your plan too, is kind of operating in that sense. Yeah, exactly. Great example here. So yeah, NZD CAD, higher time frame liquidity, none, type continuation. Yeah, so this is very good because if you can compile this into a data sheet and filter by these different confluences, you can really see what works best for your plan versus not. But is there any questions here before I wrap it up? I might be all set with this webinar here. I think I went over a good amount of data. I'll message Luke as well because I know he couldn't join us today, but he did ask for his data to get looked at. All good. All right, so that'll be all for this webinar. I'm gonna end the recording here, and then I will upload